97% win rate. Wow, this sounds so good to be true. Yeah, that's because it is. Unless you know how to filter out only the highest probability setups with sniper level discipline, today I am going to walk you through a strategy that is as close to 97% win rate strategy as realistic as possible when applied with precision. Let's dive in. So, first off, let's be clear. No strategy wins 97% of the time or 85% of the time. Most people claim that. Over thousands of trades with time, what? Some setups historically do win 90+% of the time if you wait for the perfect alignment. These are high probability setups. Think of quality over quantity. So it's not about taking every trade you see, but it's about taking quality trades that aligns with your rules and that aligns with a lot of confirmation that you have built with your edge. That you know that out of 100 trades, this setup is able to give me 50, is able to give me 70, right? Based on the edge that I have, based on the statistics, based on the rules, based on the confirmations that I have. You get? So that's it. So I'm going to be showing you guys real life example on the chart using XAUUSD last week trade setup that I analyzed and I missed. And I'm going to be showing you guys what I looked out for that made me got that entry that I missed. And make sure you guys take your time, watch the video to the end, especially for those that want to pass their PREMUIM account. This video is really for you. Or you have a PREMUIM account but you haven't collected your payout, this video is really for you. Watch this video, stay true to the end, and you will get a lot of value. You know, this is fully packed. Gold XAUUSD. You know, this is a setup for last week, but I'm breaking it down and I'm using it to explain the whole strategy video. So yeah, we are, as you can see, let me go back. You know, gold was bullish all through. It was bullish, higher high, higher low, higher high, higher low. At some point, it got to this high, and then it couldn't form bullish structure anymore. Bullish structure is higher high, higher lows, and then bearish structure is lower low, lower highs. It couldn't form bullish structure anymore, meaning there's a shift in price. There's a change in character. So price got to this place, instead of forming higher lows and going up, it broke this low right here. Broke this low right here, broke it, went all the way down, got to this low, and even broke that low. You know, once we broke that low, we understood that this was a change in character and price is no longer bullish overall anymore on the H1 time frame. So what happened? We saw that price has now changed character, meaning price is going to be bearish. But what the price do? Price came, started retracing, retracing, started retracing. You know, price started retracing, got to this place, started forming um liquidity pool over here, liquidity pool over here, liquidity pool over here, gathering orders, moving what they call it. Price started ranging, you know, gathering orders, accumulating orders, and then got to this place, and then we were able to spot a buy side liquidity equal highs over here. You know, price came back down, tapped on this level right here after wiping this liquidity, this sell side liquidity. After wiping this liquidity, price came to this level, tapped it, and then started moving to the upside. So we were able to spot higher lows, equal highs here, meaning there is some level of liquidity here as well, and price has also built up accumulated orders over here, buying and selling, and then this confirms that price is definitely going to wipe out all these highs right here, all these highs. So what did it do? Price came, wipe it out all the way up, broke all this high, and then got to this place. Now what happened? when it got to this place. When it got to this place, price started forming, falling down and falling down, started forming bearish structure. Now, before this bearish structure was made, to identify your premium level of supply, because this level reacted on a premium zone, to identify your premium level of supply or demand. Whenever you want to identify a particular level, and you want to be sure that this level is the level after liquidity is being taken out, because it does not work, it is not a high probability trade if you have no further confirmations. So you have to check out for imbalances, and you have to check out for inducement. You also have to check out for liquidity sweep as well, because trading the CFD market is all about liquidity and inducement. Every day is all about grabbing and taking orders. So you have to learn how to use it to your advantage. So we have been able to spot our liquidity here, which was taken out, and then price cleared all these orders, highs that were here, cleared all of them, and then got to a certain point where, so before it got to this place, before price got to this high, broke this high and reacted. After breaking that high, we want to know the direction at which price is heading to. So normally what I do is to find my premium level of demand or supply. I come and I draw my Fibonacci retracement. So I draw it from this high, this is the last high, all the way down to this low right here. So we are looking for price above 50%, or below 50%, depending on the scenario. If it is a sell scenario you're looking for, you look for price above 50%. Is a buy scenario, you look for price below 50%. So as you can look here, we have our 61.8 down to our 70, down to our, let me mark it well, down to our down to our 70, we have our 61.8 down to our 7.8, down to our 786, 0.786, so normally mark from here to this zone, but the more important zone is the 71.8 zone. So we'll see what happened. As you can see, price got to that particular zone. So if we draw our rectangular tool to mark that zone up, draw a rectangular tool to mark that zone up, you will see that price reacted on the premium level at which we sold. So this is one of the ways I use to identify a particular zone that is actually going to work. But it does not work solely based on just drawing the fib tool. It works with other confluences, liquidity, inducement. You have to check if there's an imbalance there. You have to check for other factors. You can add it up to your list of confirmations, but you need other confluences for this to work. So as you can see, our confluence that we had here was that, number one, price has started changing in character and is no longer a bullish structure, right? Now it came here and it started accumulating order, ranging, finding its direction. Now when it came towards this zone, it started forming liquidity to the upside, right? It formed liquidity and we were sure that this liquidity will be taken out. So when price came to this place, we were thinking it was going to start forming very structure, lower low, lower highs. It didn't. It got to this zone right here, reacted and started buying to the upside. Now when he started doing that, we understood that, oh, this liquidity will be taken out, and if the liquidity is being taken out and is being grabbed, we understood that there is a higher chances, there is a higher probability that we might be getting in for a possible sales. So what happened? price took out the liquidity, and then after breaking structure and taking out the liquidity, we drew our Fibonacci retracement, you know, because as you can see, price overall, if we are marking up this zone to identify its structure, we can see that it is trying to form somewhat of a bearish structure. So any further retracement and any further retracement to the upside is just to grab liquidity and then potentially keep going down, of which you can see what it did, started going down. So once it got to that place, it took out this liquidity, wiped it out, and then reacted on our premium level, you know, and then fell back down. So we had confluences from structure, that this was a bullish structure, and then it is now having a shift in character, and then it is now becoming a bearish structure. And we could confirm that there was a buy side liquidity. We could confirm that there's a buy side liquidity to be taken out, which is this liquidity right here that will be taken out, and then a zone using our Fibonacci retracement, a premium level of our premium level, which is our Fibonacci to identify that price was going to retrace after sweeping the liquidity. So we had these two confirmation that was solid enough on this setup. It's not difficult, it's not as complicated as you think. So like I did, I will draw the Fibonacci for the last time. You come here, hold your fib to draw it from the top, to the bottom if you're looking for sales. And then you can see that this line is 71.8, and this is the premium level at which we took our trade from. So this helped you. I hope this video helps you. Watch it over and over and again. Try to understand um that the fib2 is actually important, but you need other confluences to back it up to make it more effective. So this is how I was able to catch this gold trade using liquidity and premium and the fib2 to identify our premium level of supply or demand. So this is it for this video, guys. I'll see you guys on my next one. Make sure you leave a like button, subscribe, comment, and join my Telegram channel to support your boy. I'll see you guys on my next video, guys. Peace out.